Argo blockchain is facing a class action lawsuit alleging that they made untrue or incomplete statements during their 2021 IPO of American Depository Shares, omitting facts that may have made the statements misleading. This included failing to disclose significant capital constraints, electricity and network difficulties which impacted their ability to mine Bitcoin. The mining firm's stock has dropped significantly in the past year due to the decline of crypto valuations and rising electricity costs. One of the biggest miners has even filed for bankruptcy. Argo narrowly avoided the same fate by selling their Helios facility, and shares have since recovered. Argo has yet to respond to the allegations. This class action lawsuit is a reminder of the risks cryptocurrency miners face, especially when it comes to capital constraints, electricity costs, and network difficulties. Argo narrowly avoided bankruptcy by selling the Helios facility, but their LSE-listed shares have still suffered and have yet to fully recover. Argo has yet to respond to the lawsuit, and their future in the industry is still uncertain. Aave has deployed its third version on the Ethereum network following unanimous support for a governance proposal. This proposal focuses on mitigating user risk, improving capital efficiency and gas optimization. New features such as high-efficiency mod and liquid staking derivatives allow users to leverage larger amounts of assets. They can then stake these assets on the blockchain for rewards. The Aave protocol has seen a 23.37% increase in total value locked over the past 30 days, with the Aave token trading at $86.73. This upgrade of Aave protocol is a great step forward in mitigating user risk and improving capital efficiency. The new high-efficiency mode allows users to maximize their collateral for correlated assets like STIF, as well as reducing gas costs by up to 25%. This is reflected in the TVL of the Aave protocol, which has increased over the past month by more than 23%. The Aave tokenized trading at around $86, indicating that the market is welcoming the upgrade. Fintech has revolutionized the way small to medium-sized businesses access capital. It offers more flexible rates, shorter term lengths and pre-approvals in less time. It has also enabled businesses to track their transactions and funding quickly and easily. This has opened doors to businesses which were previously closed. In addition, the competitive nature of the industry means better rates for business owners. This allows them to make the best decisions for their business in the short and long term. This article provides an insightful look into how Fintech has revolutionized the small business financing landscape, providing businesses with more access to capital and more flexible loan terms. It also highlights the potential issues that come with Fintech and offers advice to business owners on how to navigate the new financial landscape. To answer the question of whether you qualify for the Forbes Finance Council, you must meet the criteria for their invitation-only organization. Gryphon Digital, a private Bitcoin miner, is merging with publicly traded cannabis company Akerna to become a publicly traded entity. The new company will assume Gryphon's name and be headquartered in Las Vegas, Nevada. Current equity holders of Gryphon are expected to own 92.5% of the new entity, while Akerna shareholders will own 7.5%. The CEO of Gryphon, Rob Chang, will become the new CEO of the company, and Jessica Billingsley of Akerna will be on the board. The proposed merger comes after the termination of a previous attempt to go public via a reverse merger with Sphere 3D. Gryphon has a potential revenue-generating profile of 1.1 exahash per second and a cost basis of 0.75 AS. Akerna's share price fell 15% on Friday and has a market capitalization of $8 million. This merger is a remarkable development for both companies as it creates an opportunity for Gryphon Digital to go public and for Akerna shareholders to benefit from the new publicly traded entity. It also opens up new avenues of growth for both companies, which had previously been limited by their respective size and scope. The combined entity should have the potential to generate significant revenue, and the deal has already been met with some skepticism from the mining community. The digital butterfly effect is the idea that small and seemingly insignificant actions can lead to large and unpredictable events. It can be applied to digital marketing. This concept has implications for digital marketers as events from the past may impact the future of their strategies. A small change could make a big difference. Strategies to prepare for the digital butterfly effect include staying up to date with trends, analyzing consumer behavior, having flexible strategies, making small changes, building relationships with influencers, and using social media monitoring tools. A/B testing is also an important strategy to consider. Bob McKay's experience in digital media agency makes him a great source of knowledge and advice on navigating the digital butterfly effect and its implications. With his expertise and guidance, businesses can stay up to date on trends and anticipate changes in the industry and develop strategies that are flexible and able to be adapted quickly. Bob's insights can help businesses leverage different types of content, use A/B testing, and build relationships with influencers to build a successful digital marketing strategy. Bitcoin has had a strong start to the year, with its price jumping 40% in the month of January due to a weakening US dollar. The rally has predominantly been driven by US buyers, according to observers. CoinDesk's markets team senior reporter Omkar Godbole reported on this development. This is an interesting observation of Bitcoin's performance this year, particularly in relation to the US dollar. It shows that the cryptocurrency is still a viable investment option.